Welcome back to Morning Trade Live. Let's focus on the big picture ahead of the opening bell. We have about 10 minutes to go before that bell rings. Joining us now is Peter Andersen, Chief Investment Officer at Andersen Capital Management. Peter, thanks so much for joining the show.
Good morning.
So, Peter, some different vibes here in terms of a more upbeat, it seems like Wall Street than we'd seen to kick off the week. 2 days doesn't necessarily make a trend, that's for sure. But, it does seem like this is a market that wants to rally. So I'm curious, is this a rally that could have legs longer than 2 days? Or do you think that there's more weakness in store?
So many different vibes as you introduce me. Yes, this is a changing market so much that I hesitate to say that there's any trend happening right now. It is so dependent on the politics of the day, especially what President Trump has to say. So, for instance, yesterday, the fact that he mentioned that he would not fire the Fed seems to have fueled today's spike in a rally. However, I caution anybody to read any more into that than just the daily news. So we are really at a period here where it changes so much. The changes correlated so much to the news of the day.
You know, the market was experiencing weakness, though, even before President Trump posted about potentially terminating Powell, which, as you said, he's now walked back. But now that we know that that's not his intention, I guess, how big of a catalyst could that actually be for this market? And I guess how much do future gains really hinge on the Fed cutting rates?
Yeah, I actually think the main driver for all this confusion is the tariff issue. And President Trump needs a major win, a major resolution from some significant country where he comes out, the administration comes out and says, here, signed, sealed, delivered, this is the tariff arrangement going forward. We have yet to see that. And I do think there is an underlying optimism, despite all this angst. There is an underlying optimism for the market. We can see it occasionally, for instance, today, when we see the strong, perhaps a strong opening today. So underlying all this is an optimism, but it is just dying to see some kind of solid, clutchable data that are news that will come out of the White House. And, time is his enemy. The longer it takes to resolve the tariffs, I think the more strain the market will feel.
Solid, clutchable data, but even without that, even with just commentary like the 145% tariff on Chinese imports, according to President Trump, is very high, and it won't be that high. No, it won't be anywhere near that high. It'll come down substantially, but it won't be zero. Is causing a market that wants to rally. So I guess what could the bounce back look like when we do actually finally get some more concrete answers here?
Well, I am positioned for that type of bounce back. So obviously, I think that the bounce back will be tremendous. I mean, we have seen several impressive one-day rallies this year, right? And so use that as a guidepost for when we get solid, consistent, reliable trends. I do think that we will have a very, very strong rally across the board. However, we're like horses waiting for the gun to go off in terms of getting a good, strong set of signals. And not just a singular signal, but a set of signals, consistent. Say a week of positive data. Let me just create something for you. So, for instance, I'm not firing the Fed. We have a Chinese resolution. The border is such and such. If all these data points kind of align, then it is really set for a strong rally.
And if you're positioned for that bounce back, which I do want to talk about that positioning in just a second, it sounds like you're optimistic that we will get some answers. But will any answer be positive for this market? Because if there still are substantial tariffs on China, or even that 10% baseline tariff on everyone else, is this a market that can rally regardless?
Yeah, let's think of it in two stages. I mean, so there are two unknowns with regards to the tariffs. Number one is, will they ever be resolved, right? And number two is, well, they are resolved, and now let's look at the analysis and analyze, what the impact will be. So we haven't gotten to even stage one. And I would say that this will be a two-stage rally. The first thing will happen is Thank goodness these tariffs have been resolved. Oh, now after that rally runs out, will there be a little bit of a hangover where we'll go back to the books and say, all right, how is this going to impact future earnings? Once that's figured out, then I do think we'll have the stage two of the rally. You know, of course, there will be suppression in earnings if there are tariffs. But the fact that we would at least know what those suppressed earnings will be is a tremendous boost to optimism.
There's also the economic impact, of course, of tariffs as well. How are you weighing that as you think about your market outlook?
Yes, so that is a puzzle that I almost dare say is unanalyzable. You know, economists are burning their brains trying to model this stuff, and I'm in the camp of we don't know until the actual tariffs are put into place how this game theory is going to play out. You can spend a lot of time doing mathematical modeling of this, but we are really in unprecedented territory right now. So it's more like a grand experiment. And I know that makes the market nervous when you say terms like experiment, but I do think in reality, that is a situation. Nobody can really predict on any kind of reliable level what the impacts will be between two countries that have levied tariffs upon each other. You actually have to see how the money flows once those tariffs are in place, in my opinion.
Okay, so talk to us about your investment strategy right now, what investors should be doing, given the fact that we don't have clear answers in terms of tariffs. We don't have clear answers in terms of what the earnings outlook will be or impact will be. And you say that the economic outlook is unanalyzable.
So there is a back door to some of this stuff. And one free present I think the markets have given us is if you look at European equities, specifically European defense and aerospace equities, they seem to be remarkably devoid of all these things we just spent 3 minutes talking about. The positive signs are that NATO is now more or less on its own, so to speak. So because of that, they have started a rearmament scheme where they are spending hundreds of billions of euros building up their own defense mechanisms and not wanting to rely on the US. That is a tremendous boost for certain companies like Rolls-Royce, for instance, we think, and several other companies. Also, remember that there's been a new leader in Germany, a new chancellor, who has also announced a rearmament of Germany. So these things really do point to, first, tariffs are not an issue. Whether or not the Fed is here to stay is not an issue. It's a much more pure way of analyzing things. And as I said, I think it's a rare opportunity that has presented itself. The clouds have kind of cleared for a moment when you look at European aerospace and defense companies.
Okay, so European aerospace and defense, how are you thinking about big tech, especially as we obviously heard from Tesla, we'll hear from Alphabet this week. We'll, of course, hear from some of the other big names next week. They're on sale right now. Are you scooping any of those names up?
I'm not. In fact, you know, I have been probably the biggest proponent of companies like NVIDIA. For years, I owned NVIDIA stock, and last summer we dumped the stock because it hit one of our sell triggers, which had to do with artificial intelligence and the enthusiasm for that sector. We thought back in the summer we were starting to see waning signs that maybe people have exaggerated the value of artificial intelligence. And I'm lucky to say that right now, I'm sure we've all noticed, AI has really taken a major back seat on all the news items and the concerns. We're also seeing companies perhaps walking back a little bit about how much money they're going to spend in the future in AI because they're now distracted about the tariff situation. So I'm really on the sidelines for most tech like that. I certainly do like cybersecurity because I think that is a staple in all our lives. But in terms of artificial intelligence and the big tech companies, I have stayed away from since last summer.
And what gets you back in there?
I have to tell you that the reality of artificial intelligence, and I've spent a lot of time looking at this, and I have a considerable background in technology, so that perhaps will give me a little bit more credibility than most. I do think that artificial intelligence has actually topped out, and I'm probably the first one to ever say that. But in terms of the expectations, I don't think we're going to go any further in the development until we have a major breakthrough. So for now, I can't foresee any sign that would bring me back to a company like NVIDIA unless there were a spectacular breakthrough, but I don't anticipate that soon.
Wow. Interesting insights there. We really appreciate you sharing them. Just hearing the bell now, Peter Andersen, Chief Investment Officer, founder of Andersen Capital Management. Thank you so much for sharing your insights.